The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. My pleasure to be here Monday through Friday. Tiger Technicians Hour, 11 o'clock till noon Eastern Time, 877-927-6648. Love to hear from you. And what a market. Well, of course, we had some great shows earlier on. Let's hope we can keep that pace up and go right into our swim lesson at 12 o'clock with Think or Swim, guys. That's a fabulous show, of course. Today being Wednesday, let's just get to the numbers halfway through the week, almost halfway through the week. What a spectacular move from that turnaround on Friday. Turnaround where we went from the short side to the long side from my subscribers. And I've been adding to the long side since then and had some fabulous huge percentage moves. Very nice. I like this. Now, I discussed yesterday just the chance that we had seen a low, maybe not the low, but at the same time, the conditions that were met, the type of rally that we had had from Friday intraday to Sunday night in the futures, to Monday in the overseas futures market, to yesterday's fabulous session, to today where the Dow is up 219, the S&P is at 16,415. Do you realize we're talking about being at 16,540 just the other day? 15,540. This is a huge move. Not only that, you've got comparable moves all over the show. You've got in fact, I need to just check something out. You've got a move in the Dow that is 1.34%, up 214 to 16,411. You've got a move in the S&P that's 1.48%, up 28 to 1923. You've got the QQQ series. The Qs are up 1.64, even a better percentage at 101.80. You've got the composite index up 81 at 4,517, 1.84%. These are big moves. These are not small moves. The VIX index has just turned down. It's gone to the 23. It's not yet even at the 22s, although it's close. It's at 23.04, down $1.07. You've got the TRIN, which is at 0.72. It's barely noticing anything that's going on. And the futures and the E-minis are up 30 at 1919. I'm suspecting that the high that we've just seen intraday is perhaps the high, at least for this session, and that there's a consolidation session tomorrow of either a small doji candle or a down move of about 60 to 80 points in the Dow, maybe 8 to 10 points in the S&P intraday. It might just be an intraday move, and I'm going to discuss a bunch of things as we move on here. But this is very good action, very, very good action. You've got, at this particular point, it's really nice to see that you've got, if I can just move this up so I can get all the numbers. If you're looking at bonds, bonds are down at 164 and 8/30 seconds, down $1.50. You've got high-grade copper at 2.53. I like that, up 48 cents. You've got gold up 2.5 at 12.10. Silver is up. You've got crude oil, of course. When the dollar pulls back, and at this point the dollar is down, it's actually up 0.7 at 96.93. But this has helped the rally yesterday in gold, in the dollar, pulled gold back down, and now you've got a really interesting market. I'm looking at my three bears: VIXI, Bondi, Goldie, and Dolly. And it's just fascinating. No, I shouldn't say four bears. These are the four key indices. And out of that, with the TLT down 1.2 at 128.85 under the 129 support that I said to subscribers is kind of important. This is this is really helping the markets. Look, you had a left side, right side price time, as I said to subscribers, should come into the 1922.25 high that was made way back, let me see, I think that was on the 4th, on the 4th of February, and it was supposed to come in at 8 o'clock tonight. Well, we went right to 1921.00. We missed it by $1.25, but we've missed it by some 8 hours, 9 hours. So this is going to be really important. No, 8 o'clock. 8 hours, yeah. So what we're looking at here is a situation that says the strength that we've seen isn't just buying. Now I can go into my preamble. Yeah, let's just do this. I'm going to move this away. As your 120-minute chart, let's just move this away. I want to show you something very interesting. If I can find this chart here, I hope this is the right one. Okay. What I'd shown to subscribers was that there are certain moves that have matching complexities. The very sharp move in August when that pink downtrend and down channel line was broken, went straight down from the 17,400 area, bam, right down to 15,370. And that was the low in August. And then there was a rally, a lousy next day, but then there was a very strong rally. And this Chapman wave Roman candle was left standing for a couple of reasons, because there was a price move above it that closed above it twice. And that to me is very important. It says you can come back and test the middle of the candle, but there's a real good chance that at a certain point you're going to go much higher, which you did. You went all the way to down 16,933. Then it pulled back and turned that 15,900 into a major trampoline bounce level of support, and bam, we took off to the 17,977 level, which was the 3rd of November high. Then it started the same kind of channel, and then it broke down. And that's the channel that I was berating myself for not immediately on a close below that trend line, just switching to the short position. We got in short a little late, but we did get in short, and it's been bouncing around up and down. We made an arch formation, ABC. Really, you could call it a C1, C2 Chapman wave failure, or a peak C minus, and it comes back and it retests, but successfully retests on Thursday. Instead of going to the 15,450 level, the 20th of January low, instead it goes where? It goes to the 11th of February, and it goes to 15,503, some 60 points higher. That was really important as far as I'm concerned. We immediately switched from the short side to the long side. And now that the long side, the successful arch in the Chapman wave methodology says, remember this is from my book, my CD introducing the Chapman wave methodology, says that if there's a successful test, you can go to the next level, the next peak, and if you take out that peak or a moving average, and usually it's the 9-period moving average resistance, you can retest the recent high of the arch, and that says that the Dow could go all the way to 16,510.98. So far today, we've gone to 16,421. Very, very spectacular move. This move up is as strong. In fact, it's about as strong at this particular point as those 3 candles to the downside going to the low. But actually, it's much stronger because you've had 3 consecutive big triple-digit days. Even if there's a close, and I think we're going to close well off the high of today, and we'll consolidate for a day or two.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Got a bunch of questions. I'll get to those questions, but there are two things I want to do right now. Wood, W-O-O-D, iShares Global Timber and Forestry ETF, trading at 41.35, up $1.03. That's gone from 56.69 to the most recent low of 30 in the 39s. I would say that a move of $17 on a $56 stock is very significant. And what have we done? We've gone to a trough Z. That is so important. Look at the HGX, the Philadelphia Housing Sector Index. Trough D, going to a leg A. This is significant. This is the reason why I wanted to be long. I wanted to add to the longs, and I wanted to say to the market, hey, we're long. Do what you have to do. That's fine. But the way you handle the first 3 days after the low bar is going to be imperative to monitor. Let's go to Brent in San Mateo, California. Hi, Brent. How are you?
Greg.
Oh, it's Greg. Oh, I was going to say, Greg is not from San Mateo. It's okay. Greg, hi, how are you?
I'm well, thank you. Good morning.
Good morning. You'd like to look at?
USO.
Okay. Well, let's go to the USO. And folks, the USO is the United States. Those are the oil fund, and it's the trading vehicle for the oil fund. And it is trading at 871 right now, up 40 cents. And the MACD just deflected up over the last couple of days. The stochastic is running nicely. It's at 25%, not great, but nicely. The weekly chart has recycled. So this is going to be, let me just do this. It's an A, B, C, and that is a D. So the weekly chart has made its D, but it hasn't made a leg A yet. That's going to make this week really important. Why? Because you want not just to move above $8.82 to $8.83 to start a new leg A. You really, and the previous one was an A minus. Let me just put in the minus right there because it failed. What you really want to see over the next, I'd give it a little time. It doesn't have to be a rush, but I would like to see the USO over 963 so that it's making the 9-period moving average in the weekly chart some kind of a support. Now, let me ask you the question. What's the situation? Do you have any position here, or what would you like to do?
I'm in at yesterday's low at 818. 818.
Okay, and the low of this move to the downside in the 11th was at 767, so you're still well within, way less than a point of the low. So the position that you bought, is it like a starter position? Is it a position that you put on that you don't want to add to, or what's the flexibility you have?
No, it's just short term. I was expecting the API numbers to come out today. It sounds like they're going to come out because of the holiday tomorrow, and so I don't mind taking profits that I have now. I was looking at the 10-minute chart, and it looks like it's done a peak C today, and I can always get back into.
Sorry, I'm sorry. Let me just ask you. So you're looking at the USO, the daily now, the 10-minute chart. Sorry, the 10-minute chart taking the low, but I must double check the low of 818 at 11:20 on the 16th, and then today is 818. So I'm going to count this as an A to B. Count it either way, it goes to a C. But at the same time, you see that the C went to 878. Pulls back and then goes back to 878. Now, what I tend to do, I'm going to do this live right now. So I'm going to call that a low, and I don't mind a double bottom low as long as it's the exact same price. Why? Because I've found over the years, especially when you get to the ETFs and the futures, that it's just as important to count a double bottom as the start of a move. And if it breaks under it, you have to restart, because what happens very often is, because of the nature of these things, a double bottom is really a successful test. So what you might see here on the chart, if you're looking at Tiger TV, I've got peak C1, peak C2 right next to one another because they're the same price. And then what I normally do is I put a plus sign over C2. Although this is holding a little bit tightly, normally I'd probably wait a little bit longer before I did that, but I make it red. And what happens is, if it holds very well and it doesn't pull back very far from that double top, there's a really good chance you're still going to make a D. That's the first thing. The second thing is, the reason why I want to anticipate that it was just a penny off of making that next peak to a D. So I like to be prepared. I like to say, you know what? I don't want to be holding this thinking that it's still going to go to a D. There's a chance with that double top we might have made it, so I want to prepare. Are you with me so far?
Yeah, I am.
Okay. And the other thing that I consider to be really important is I do not have any technicals on this. I'm going to pull up a chart that does have the technicals right here. And that one had resistance in the E-minis at 1923.50. The high so far today is 1921. Let's see what it says for it's got the Chapman wave indications on it of resistance and support. So this is open to the upside. I'm going to just change it for the moment to a 5-minute just to see if I get a resistance. No, this is really interesting. You know what this is suggesting? This is suggesting that the upside in the in crude oil, well, certainly in the USO, has very good support, but the upside is kind of open right now. The MACD's good. The stochastic's at 86%. It's holding well. Now, let's plan this. So you're talking about 10:30 tomorrow, Thursday, the chance that there's a big fluctuation either up or down because there's a report on the inventory.
Right.
And you don't mind taking profits and getting back in. Now, I'm going to do something. Ooh. With this move that we're looking at in the market, with the move that I'm looking at in the dollar in the move, I'm just going, if you don't mind, I'm going to grab the dollar chart for a second, DXY. Put it there. I'm going to put it right here, DXY. Got to hit it correctly, DXY. Yeah. So, okay, I've got it. So the dollar is at 96.94, turning the 96.63 level, 9-period moving average into the support to watch. I think there's a chance that it could pop just a little bit more, but if it doesn't do that and it takes out 96.38, the low of yesterday, then you've started the U-shaped pattern. Gold should come back alive again, and oil should benefit. Oh, I know what I'm going to do. So this is what I'm going to suggest to you. Do you have enough to keep a little bit and sell, say, 2/3? Is it worthwhile, or if you're either in or you're out at this particular point?
No, I could sell 2/3.
Okay. My thinking is this. I'd let them, I think, I'm basing this now on my shorter term indicators. I think the Dow has made, at least if it's not the high for the day, it's very close to the high for the day, and I think it's going to be pulling back a little later in the day. So my suggestion is that the USO, at this particular point, let me just grab my 120-minute chart. This is A, B, C. Oh, there's still a D to go, and it should make the D. Oh, it's making it difficult for me. I know what I'm going to do. I've got a break. Are you able to hold through the break? Because I think I'm getting a picture in my mind of what I think would be the safest thing to do. Okay, we're going to hold on. We've got Greg on the line. We're looking at the USO. I know a lot of people have asked me and sent me emails about crude oil. I'm going to do a quick analysis during the break. I'll be back. Basil Chapman, Tiger Technicians Hour, Dow's up 208.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back, and we're back with Greg in San Mateo, California. We're looking at USO, and it's acting. The USO is acting just so well. I've got it in leg C up in the 120-minute chart. I mean, I don't want to mess. Greg, you got in so well. I don't really want to mess with your trade. I think that the only thing I would do is I would say to you, if you want, use a trading stop. It's at 877. Use a trading stop. It could even be a tight one of 865. And let it just trade. So a 10-cent stop. It's 10 cents from where it is now. And just keep it going all day. And hopefully it'll even go into tomorrow morning. I'm going to say this. If it gets to 883, anywhere around there, then the trading stop has to be a little bit wider, because otherwise you will get stopped out. What I would prefer is if it closes near the high of the day, opens nicely tomorrow, because it's not acted all that well, even with the market up over the last few days. So it could even have a gap up tomorrow. And then I would take off 1/3. I try to keep 2/3. It looks to me like even if it's a bad report, and I am expecting that within a day we are going to get a peak A in the markets, and that would be a peak A probably in the USO, that you'd be able to add back. So, so my thinking here is that you got in so nicely on an index, an ETF, an ETN actually, that has gone down from the 40s to the 7s. And here you are with a great entry. It would be a great pity if you get out and then all of a sudden it starts to gap up and you can never get back in at that, not never, but you can't get back in at that level before it actually starts to get to the 9s. And then you say, oh man, what am I going to do? So I'd like you to be able to keep a chunk of that call. You have to take a little bit of a chance to take some profit. So that gives you that cushion for tomorrow if there's, say, a sudden 35-cent pullback. And then you can reassess. And on my show, which will be after the report comes out tomorrow, I'll do another analysis of USO, because everyone always asks me about the USO, and we'll see what happens after the report. If the report is 10:30 Eastern time, I think that seems to make the most sense to me, because why get in the way of a move that you thought through carefully, you entered perfectly, is acting very well? You know what I'm saying?
Right, exactly. And I'm looking at the crude oil contract, the WTI, and it looks like it's in the 120-minute chart, that it's in leg B currently.
Okay, I always forget. I don't know why I don't ever have that. Everyone always says WTI, and then I don't remember what I have to punch in TradeStation to get that for some reason. But I think... I mean, look, now it's at 882. I don't want to get in the way of your beautiful trade. So I'm just saying to you, yes, you want to protect a little bit because you want to reward yourself, but maybe I'm going to say, use your instinct, use the technical analysis that got you in to say, I'm going to now take a little bit off just as a cushion, and that's the amount that I will put back if there's a sudden slide, because it does look, both on the daily and the weekly, that it would like to rally a little further to the upside, and that's why I'm looking at it positively.
Great. Thank you so much. Thank you so much.
Congratulations. A really nice entry point, and wish you luck with the trade, and we'll speak very soon. Let me know how it goes.
Okay, well, thanks.
Thank you. So, okay, folks, now let's do a couple of things here. I want you to go, if you don't mind, I'm just going to do this for the moment, ESH. See, okay, I want you to talk about takeoffs. I am going to get to other questions that I've had, but this is really important. Let me see. Look at this takeoff. I'm just grabbing, I'm not even sure where it is. This is from September. This is September the 29th of 2015. Look how you start off with a little doji candle, then you get a white candle, a doji candle, white candle, doji candle, big candle, doji candle, a whitish candle, a doji, then you pull back. That's the takeoff. Look at this one here. Not that one there, but let's just look at any of the other ones. Let's even look at, is that what I was looking at? Yes. So let's go back further if I can. Just grabbing these charts. Yeah, even the low that was made in December of 2014 at 17,067, an inverted candle. This is almost like a dragonfly candle on the 16th of December of 2014, and then big white candle, then a doji candle. So you can see that the candle that we're experiencing today is something very different. This is showing you determination to be buying the dips. This is determination. This is not just, these candles are not, I don't believe, short covering candles. There obviously has to be some short covering. But when you close at the high and then gap up the next day and then close at the high and gap up the next day, off the bottom, I have to respect this as the potential for a move higher that needs to clear and close decisively above 16,510. But if it does that, immediately the site of the 17,095 200-period exponential moving average has to come into focus, even if it's just a target on the upside that doesn't get hit. But it has to become a magnet. And that's why I'm saying I think that we're about to have, at least between now and tomorrow this time, we're going to have some kind of a consolidation before moving higher. And as a result of that, I just wanted to say that the move that we've seen with the rising stochastic and the rising MACD is not to be dismissed as just a little one-time shot. This is something that has the potential to develop into something a lot more serious on the upside. That's not to say going back to all-time highs, going back to 18,000, going back to 17,500. What it does say is when you have this kind of spring-loaded move to the upside, resistance is not held for very long because it becomes support very quickly. So here's your trend line that I drew in a little while back. That's the trend line with a target of this left side high of 16,651. And that target should be hit by the 23rd of February. I don't know if it's going to do that, but that's what I've got as a left side, right side price time match. If there is a distinct failure, that is, when I say distinct, I mean that you get this candle turns into closing almost at the low of the day, and then tomorrow we dive under 16,123, the 9-period moving average. That's just gone from an H to an M pattern. In a quicker time, I think it would take at least another day or two before we start to get the arching over. I love what's going on right now. And as a direct result, I want to just say that the positions that we have on the long side, because these are very important areas that kind of coincide with markets that move well, I'm liking what I see. That's number one. I'm not happy that the, maybe I should be happy that the VIX is only at, now it's at 22.97 for the first time in the 22s, because it gives a lot of room to go all the way down to the 19s and then the mid-teens if it can do that. But I'm just treating things one step at a time, as you know I like to do. And the USO is a good example of having the important ingredients here working. And they are working. Now the USO is at 884. So I'll be back. We've got a break coming up. I will look at MRO and BKX, the bank index, and as soon as I get back. So Basil Chapman, Target Conditions Hour, taking a break. Be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So I had a question. Hi, folks. We're back. I had a question about $7.39 down a penny. MRO, Marathon Oil Corp. You know, yes, it could bounce. I don't have a good feeling for it right now. I think there's limited upside. Limited upside is a nice percentage, 802 to 850. All right, let me put it this way, Bob. If you're in it, if the question is, I'm in it, what do I do? I'm just going to say, hey, it really needs, this is not the greatest candle on a day like this. Dow's up 213, S&P's up 27, this is down 5 cents. I would say that unless Marathon Oil can clear $7.73, start heading towards the 8 level, it's just kind of stuck. But if you are long, all I would say to you is I would have a stop. It's at 739. I wouldn't let it go lower than 719 because it's just not acting very well. Don't give it too much. 723, somewhere on that. Boom, I'm out. There are plenty of others. So that's MRO. Next question is Citicore. Yeah, that's a nice candle. It's a much better candle. It did an extension of a 1-to-1 to the downside. It broke that expanding wedge formation in the monthly after a peak D. I think it can go a little further. It's not one of the better ones. If you're looking, it's at 39.98. If you're looking at JP Morgan, which is at 58.72, not even so great. The XLF, I'm a little concerned here. The XLF, the financials, this is what's saying to me, don't get so carried away to the upside. There's still work to be done. I think there's work to be done. I'm going to say, just for the moment, there are better stocks to be looking at than the actual financials. And even the, what is the MRO, is a Marathon Oil Service, I think it is. I would just be a little careful there. I don't think they're the best looking stocks. Maybe WFC is a better one. WFC, yeah, it's a little bit better. It hasn't got that double top pattern. It's a little bit better, but it's still not great. It's only up 3 cents. I just don't think that this is the area that you need to be in. So that's my opinion. Parker's a question. Let's see. Basil, can you look at part here? What level to expect it to go from here? And that's Mike K in the den. You know, this is one of those that's starting to try. It's really, we had it at one particular point and we got stopped out, and I keep wanting to get back in. And it's had the zigzag move that is saying to me, it's really struggling to get off the bottom. I'm going to make the suggestion that if Potash Core, Saskatchewan, It has potash, obviously, and other minerals. Trading at 16.56, up 90 cents, up 5.72%. I like that. So this is what I'm going to say, Mike. You're obviously in it. And what I'm going to for the long haul, I'm going to suggest that pot is not good for you for the long haul. How's that for a double entendre? No, I'm going to suggest that I would not think a long haul. I would just say I'm in it, and I'm going to put in a stop. And I'm going to have it in two parts. One is to allow a core position to rally as far as it can, and the other is to have a position that if it works very well, I'm going to go in and out. And what I would say to you is that part of your position, if POT at 16.53 is able to get to 17.02 for leg C to the upside, I would take one part of it and I'd raise the stop. I'd raise the stop to about 70 or 80 cents as a stop. And then I would just keep it there. And my target here, and the target before, it's still the same target, is this bar right here between 1666 and 1754. So that's really the left side, right side. We've already extended. So now I have to do something else in this particular technique. And it's going to say, I'm going to go from there to there. There you go. Okay. So that's just saying that by the 24th of February, what did I say? It was 1702, right? 1744 is the target to the upside. And it's only if it's going to work. So I'm going to do one step at a time, and I'm going to say, core position that you've got, I would give it a little room because it's a longer-term position. Of course, closing with the low of 1464 is out of the question. I would not be holding it under that condition, no matter what. But if it's holding here and it doesn't break the low of $15 to $14.99, that's really key support. In fact, at 16.53, I'm going to make the key support. And my key support will be the low of the day today, 15.62. That's, to me, if it starts to break that, I'm getting real nervous. I just don't think I want it. But at this particular point, it's acting well. Keep your core position. And then on another 1/3, say, that you have of your position, I just have a trading stop. And that would say to me that if any point it gets to the 1740, 1750 area, I'd be prepared to take something off, and I'd want to put that back at 1655 to 1640 with about a 30-cent stop, trying to keep my core, and I'd be in and out of this because it's going to take a lot of work for this to really get into a buy mode of significance. Okay, I hope that clarifies it. And as I say, anytime it goes back under 15, I'd just say, whoa, be careful. All right, that's that question. I had another one here, NBR and OIH. Oh, we're getting to the oils, huh? NBR, I wouldn't get too carried away with the oils at this particular point. NBR, that's not bad. It's a little bit better on the weekly chart, but I have to tell you, it's at $7.11. This is Neighbors Industries. Now, these are stocks. I mean, this was back in the 30 level and comes down to $5. So this is just you have to treat it first as a balance to see if it's going to have traction. If you have traction, ABC, if it goes above 757, that's leg D. I'd start getting a little cautious. So I don't know if you've got this. So the question is, Adam, let me just see what Adam asks. The question is, I wanted to read something. Oh, maybe I'll do it in the next break, because after the next break. Based on a rally in NBR Neighbors, can we buy OIH, oil service holders, or is this just a counter rally with much more of a longer-term downtrend still to go? Oh, man, that's a really good question, because the more I'm looking at this, the more it suggests to me that we've had a deflationary spiral, a counter-trend rally. I have to treat this at least as a counter-trend rally, nothing more just yet. But a counter-trend rally will only give proof of that as a fact if something like the OIH, the Market Vectors Oil Services, is able to rally from the 23, let's call it 24 area, to the 28, 29. It's got another 17% at least on the upside. If we can get that 17%, that to me would say, great. Now you might have made a base of substance. We can treat you as a more intermediate term position. if anybody is buying now, and it does that without breaking down. So I'm going to suggest the ORH is in play on the daily. It'll only be in play in the weekly if it's able to close above 24.64. That's still another almost point to go. So yes, I'm going to say to you, I would not get married to this. I don't know what that is. Let me use a better expression. I would not buy and hold. I would treat this as an entry point and with a lot of work to be done. Why? Because I like V-shaped patterns, and this is forming the arch that can go to an M pattern. I don't want to see it rally and then fail. So if you're going to be, I'd only start a position and I would add to it on strength. I don't want to add to it on weakness. So I hope I also answered Judy's question about crude oil and where I think what's happening is right now, where we are. So I'll be right back, and then I'm going to see if I can find that and read it. What a fascinating thing was sent to me. And I have to find it, of course. I'll be back. Basil Chapman.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. A question about shorting the XLF. This is not the time. It's not yet. Not yet. No. And look at the yields. Yes, there could be a rally, and that should help the financials a little bit. Most importantly, look at that arch formation in the 30-year, look at the arch formation in the 10-year, and look at the arch formation, even a lower low in the 5-year. So you've got to be a little bit careful as far as doing any shorting in the XLF. In fact, generally shorting, we do have a short that we put on the other day, which is which is about even, which is not bad. It gapped down and now it's come back a little bit, but it's not rallying with the market. So listen to this. So Katra sends me new numbers, 21 new numbers that show the global economy is absolutely imploding. Number one, Chinese exports fell by 11.2% year over year. This is the economic collapse blog.com archives. So Chinese imports were even worse in January on a year-over-year basis. They declined a whopping 18.8%. It may be hard to believe, but Chinese imports have now plunged for 15 months in a row. In India, exports were down 13.6% on a year-over-year basis in January. In Japan, exports declined 8% in December on a year-over-year basis, while imports, I'm about to sneeze, plummeted 18%. Number six, for the sixth time in 6 years, Japanese GDP growth has gone negative. In the United States, exports were down 7% on a year-over-year basis. Otherwise, things are just fantastic. U.S. factory orders have fallen for 14 months in a row. The restaurants' performance index in the United States has dropped to the lowest level that we have seen since 2008. There are restaurants opening everywhere. I get the reports from people around the country. This month, the Baltic Dry Index fell below 300 for the first time ever. It is now cheaper to rent a 1,100-foot merchant vessel than it is to rent a Ferrari. Number 12, orders for Class 8 trucks in the United States dropped by 48% on a year-over-year basis in January. Due to lack of demand for trucks, Daimler just laid off 1,250 U.S. workers. Even though Saudi Arabia and Russia have agreed to freeze oil production at current levels, the price of United States oil has still fallen below $30 a barrel. It is being reported that 35% of all oil and gas companies around the world are at risk of falling into bankruptcy. Oh, it goes on and on and on. I've got others as well, but just suffice to say, not a good report. But in the meantime, look at this. I do believe that we will see us close quite nicely off, quite a bit off the highs of the day. Then I think we got perhaps a little doji candle, and how we come out of that doji candle on Thursday into Friday is going to be absolutely imperative. If there's a break, let me go to the Dow itself since we're about to wrap up and you're going to go to your swim lessons. If the Dow is able to 16,409, one more day like this in leg A up, new A, it could be, this is the interesting thing. It becomes a D/A as soon as it goes above 16,510. That creates other things we have to look for, the H going to an M pattern, etc. But so far, I love the action. There's nothing wrong that I can see. I love the action here. I love the action, what it's done with those two Chapman wave Roman candles in the monthly chart. I love what it's doing to the weekly chart. A lot more work until the weekly chart really gets into the 16,800s. I have to look at it and say, whoops, just another arch formation. I love what's going on, but that doesn't mean to say I must love the market intermediate term. I just love right now what's going on. Let's see how we close. We're going to have to follow this in great detail. I've shown my subscribers exactly what we're looking for, why we're using the VIX as such a key metric here. It is so imperative that this VIX goes from the 22s now in the next 2-3 days into the teens. If it starts to hold in the teens, we've got a different dynamic. So let me suffice to say, nice action. I think we will close more towards the 16,350s in the Dow. I hope I'm wrong, but that's what I'm looking at. And then we have a day or so of rest, and then we start moving higher. That's going to be key. Have a wonderful day. Stay tuned for all the other hosts. Hope you have a great day. See you tomorrow, Thursday. Basil Chapman signing off.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN,